Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant Nair. With me, my colleagues Sonia and Reema joins us on the program today. Guys, hi, good morning.
Hi, good morning.
Chugging along to the end of the year, slowly but surely. We've got markets which are giving us absolutely no help, right?
Confusing signals.
Confusing signals and huge moves. And that's essentially what I want to start with today. Just look at the last 5 days on the Nifty, right? That's it. I mean, look at that. This is nothing but the day's close as compared to the intraday high or the intraday low. Yesterday, the market sold off 274 points from the intraday high. The day before, the market jumped 185 points from the intraday low. The day before that, that is the 19th of December, we got a 165-point bounce from the lows of the day. And then cumulatively, the previous two sessions, we had a 300-point sell-off from the intraday highs. So this is a very large sort of intraday range that we're talking about day after day.
Actually, the chart really looks like, one of those roller coasters that you have in those amusement parks. You don't know when there's going to be that steep fall.
One thing is sure, Sonia, right? You basically don't want to do anything right at the word go. That's what this chart tells you, right? Because, from the extreme point of the day, which is low or the high, the market has been reversing. So, it makes it that much more difficult for traders to navigate. How do you do it? Because yesterday, who would have thought while the rest of the world was absolutely fine, the market here would sell off the way it did. With that said, let me just quickly run you through a few things in terms of takeoff from global markets, etc. as well. So last night we had the US markets which rallied, but low volume, very low volume day. 1.5%, which is great. The Nasdaq was up about 1.5%, a little more than that. So that's good. But you have the dollar index, which is back up, and you've got oil prices, which are higher. So we had the U.S. Consumer Conference Board sort of consumer survey for the month of December, which is rebounded in a very sharp way. This is surprising. Which basically means that the economy in the U.S., at least one data point is telling you, is not doing as badly. The dollar, as a result, moved up back above 104. Oil inventories, this is the official data, that fell, and you had oil prices which are back at about $82 per barrel mark. So, just three Qs, nothing very much in the rates market, yield market, or anything of that sort. So, equities higher, oil higher, and you have dollar which is slightly up as well. The market here sold off, and it's a bit puzzling, right? I mean, I heard reasons basically saying this is because of the COVID scare. We put out a piece day before yesterday on Market Laser at 9 a.m. talking about how cases in China were rising, and one needs to be cognizant of it because it may eventually lead other governments to be proactive, take notice, etc. But is that the big sort of dominant reason why the market sold off? I think at the margin that may be, but I think more than anything else, maybe market participants were looking for an excuse, for a reason to take profits off the table. And this got blamed. But I think at the margin, this is something which still needs to be watched. It's a serious situation in China and a few other countries. China, of course, being the epicenter of this thing now. But we explained this. This is natural as China reopens. On levels, Nifty yesterday finally sort of breached the 40-day exponential moving average on a closing basis. Supports are at the November low. We didn't get to the November lows yesterday, although we got very close to it, which is 18,133. And very close to it, there is also the rising channel from all the way from the June lows, absolute June bottom. There's a trend line which is coming up, which now today will meet the Nifty at about 18,120. So there are supports in that 18,120, 18,130 kind of zone. For the Bank Nifty, it's once again closed around its 40-day exponential moving average. Which is 42,485. That remains an important support. The Bank Nifty closed above it. On the way up, the Nifty Bank, which is the stronger of the two indices, has been the 20-day for the Bank Nifty stands at 43,317. And then yesterday's high, which is at 43,615, also comes into play. So these are some levels. But as I said, and that graphic made the point very clear, what has worked is taking positions not immediately from the gap up or the gap down, although that may also work because many of these are from the opening gaps or the opening gap up or the opening gap lows, but you don't want to chase things. I mean, that's basically, I think, the point. The market has been reversing from one extreme to the other extreme, or at least over the last 5 sessions, very, very volatile. Sonia.
Oh, absolutely, Prashant. And although the SGX Nifty is indicating that the start will be in the green today, through the course of the day, you should be prepared for some volatility, right? Because as you pointed out, not only that has been the case over the last many days, but if you look at the numbers, I mean, FII sold in a big way yesterday. FII sold over 1,100 crores, although DIIs compensated with that. And put together in December so far, FIIs have sold almost 9,000 crores in the cash market. So there's definitely some trepidation as we head into the end of the year. Even if you look at individual names, right? I mean, if you go by what's happening in the F&O market, there was a lot of long unwinding seen in some of the gainers of this year. So whether it's Adani Enterprises, Adani Ports, even if you look at this month so far, stocks like Tata Motors, Maruti, Eicher have all lost about 8 to 10%. And these were a couple of big gainers. So perhaps the market is choosing to just take a little money off the table as we head into the end of the year. And there are these concerns about, the China COVID situation. Having said all of that, perhaps the downside this morning could be protected because of the positive global cues. The US markets were up over 500 points, the Dow that is. And I'm watching the 50-day moving average, which is at 18,143. That's perhaps a key level to watch on the downside. Remember, this 18,150 to 18,200 has proven to be a key support for the market. So let's see if that gets held. Initially, at least at the start of trade, things will be in the green. But as we said, there's so much volatility that just brace yourself for a lot of action through the day.
Hi, Sonia. Right now, at least the trends in the SGX Nifty is suggesting a positive start, currently up 110 points. One more point about the US markets, because we had a very strong finish. One of the reasons attributed was the consumer confidence data, which came in at the highest level since April. But another reason is that Nike and FedEx, and both these two are seen as and considered as gauges of retail demand and the economic outlook. They both reported better than expected results in the United States. But a quick word on FedEx. The beat in FedEx was not driven by volumes. It was not driven by revenues. Revenues for FedEx actually declined 3%. If you look at the internals, the ground express volumes were roughly down 10%, which indicates that consumers are still reining back on spending getting into the holiday season. So that's a bit of a worry, because the reason FedEx rallied was on aggressive cost optimization plans. The company has indicated that their cost-saving plans will be close to $3.7 billion in 2023, which is roughly equal to the annual profits of the company. So that's the reason why FedEx rallied. It's not on account of volumes. It's on account of the beat in the bottom line due to the company's cost, optimization plans. Another word on the IPO action. Today, Sula Vineyards, which is India's largest wine producer and seller, will be debuting on the bourses. This, remember, was a 960 crore pure offer for sale. It had seen a subscription of 2.3 times, and currently the grey market premium is suggesting very mild gains. Another one closed yesterday. That is KFin Tech. The overall subscription was about 2.6 times. And remember, this is a direct competitor to CAMS. CAMS had debuted in the bourses in 2020. At that time, this was also a pure offer for sale. But the kind of subscription CAMS got was 47 times. So in comparison, KFin Tech has seen muted subscription. And CAMS, since its listing, has done phenomenally well. The stock has rallied close to about 80-odd%. So we'll watch for KFin Tech. Just the short point is, compared to its competitor, its direct competitor, it's seen muted subscription, just about 2.6 times. The IPO closed yesterday.
Okay, all that talk about Sula Vineyards got me quite thirsty, considering that we're heading into a weekend as well. But just want to make one point, I know that it's the largest winemaker and it has market share, etc. The only problem with Sula is that in the last 4 years, the revenues of Sula have gone nowhere. I think 3-4 years back, Sula revenues were about 520 crores. In fact, that's fallen to about 450 crores or so. So that's the only issue. Also, it still has debt on its books, considerable amount of debt, about 240 crores or so. And as Rima was saying, it was a pure OFS, so nothing goes to the company. So in that sense, perhaps you could see a bit of a muted listing for Sula Vineyards, but that will definitely be on our radar today. A couple of more things. First up, we have an equity call coming in from Chris Wood of Jefferies, and they've made some very interesting changes in their India long-only equity portfolio. They talk about REC. So they've made an investment in REC, which will be introduced with a 4% weighting. And Chris Wood says that this will be paid for by shaving the investments in HDFC Bank, Bajaj Finance, ICICI Pru Life and ICICI Lombard by 1 percentage point each. So I guess REC could be in focus today.
Right. Well, let's get you some money market views now as well. Parul Mittal Sinha of Standard Chartered says that the dollar INR has continued to face upward pressure Despite dollar weakness and lower oil prices, she expects the dollar INR pair to trade in a range of between 82.5 to 83 to the dollar next week. Amid low market liquidity towards the end of the year, she says with lower oil prices and recent rupee underperformance, any sharp uptick in the dollar INR pair is likely to be capped.
On bonds, Parul Mittal Sinha says domestic yields have remained range-bound despite a sharp rise in global yields post the major central bank decision. She expects the 10-year benchmark yield to trade in a range of 7.25 to 7.4% next week post the hawkish December MPC minutes. She says with the key members worried about inflation persisting, she expects the market pricing of rate cuts in the second half of 2023 to be slowly ironed out.
Okay, those are some views coming in, but we have lots of stock-specific action to track today. We'll get to that in just a bit in our special Top 10 segment. We're looking at Reliance Industries, Bandhan Bank, Kalpataru Power, JMC Projects, Borosil, ONGC and Alkyl Amines. That's on our radar on the back of positive news flow. And then there's Ajanta Pharma, Max, Financial Services and Asian Paints that are likely to perhaps open in the red.